And good evening, everyone. Welcome to Saturday Night Live and Rambling. I'm Clay, joined by the lovely and gracious E Train. We're glad to be
Hi.
with you tonight. Hope you're all having a good weekend. Time is going by relatively fast here at the end of the semester, so I'm staying fairly busy. Ellen is still broadcasting from yet another one of our worldwide
I like to keep you guys guessing.
broad. What do you call it?
Studios.
Studios. Could not think of the name. It's an
Hmm.
inauspicious start, but we're glad to be with you tonight. Appreciate y'all joining us. Um, Tonight, we're going to continue our series in financial failures, the hunts for silver. We're going to take a look at the Hunt brothers and their quest to corner the silver market back in the late 70s, early 80s. Late, well, 70s, I probably should say. So, give you some idea on how not to play the financial game.
Hey,
Hello,
there
Scott.
you
How
go,
are you doing?
Sky.
Good to see you. Now, I'm
Always.
curious. Where are the dogs,
In the
Ellen?
bedroom.
Oh, okay. I was
So
thinking,
I'm still trying to. No, yeah, they're right over there.
okay. I
They're
was thinking
happy.
that they would be running around with you, but
No, because they want to get in my lap, and that's just, it doesn't, then I can't focus on anything, and it's just a mess. You know me.
yeah, I know. I mean, I know about them trying to get in your lap and get attention.
Hmm.
That is what they do
Hmm. But there seem to be no noises.
so far.
Yeah, and they've got food and water and, their bully sticks and all that good stuff.
Good, good. We loves the pups. We probably need to have another pet night.
Hmm.
Mentioned doing that again, but we haven't done that in a while. We might do that one of these Tuesday nights coming up soon. And for those of you that are new or not familiar, a year or two ago, we had a pet night where everybody would send in pictures of their pet, kind of members of the family. And so we would, we just had a night where we just celebrated the furry members of the family. Hello, Jane. How are you doing?
Hey, Jane. Wrapping
Wrapping
presents.
Christmas presents. It just seems too early to me, but I guess it is December.
It is December
So
the 7th.
yeah, Pearl Harbor.
Yes. I thought that was the 6th.
Nope, 7th.
Oh,
Um, so a relatively historic day.
yes, it is.
Uh, okay, well, let's get started. We'll look at how basically Nelson Bunker and William Herbert Hunt, two brothers, two of the wealthiest men of their time, actually, tried to dominate. I said corner earlier, but I should probably word it a little clearer. Dominate, let's say, the silver market in the late 70s. And we will talk about their journey from billionaires to bankruptcy tonight. Yeah, it's kind of a tale of some hubris, obviously some bad judgment, possible market manipulation,
Mhm.
and lessons that, may resonate or apply to some of today's speculative markets. So let's begin with kind of who were the Hunt brothers. They were sons to H.L. Hunt, a Texas oil tycoon whose fortune was at the time among the largest in the U.S. Nelson, the older, was more of a visionary, more of a risk taker. Herbert, his quieter sibling, was the executor of plans. Um, You can see here in the picture, Nelson is on the right. Herbert is on the left. This is as they were being sworn in to give testimony before Congress about their about their activities. But they made a good compliment to each other. One had the vision, the other was good with details. The spark of their effort, oh, I guess I should describe their effort. They tried to, as I say, corner the silver market, and they literally would buy silver, not just contracts. They actually went out and bought the silver and
Half
stored it.
of the silver in the United States or in the world.
Yeah. They People really didn't at the time appreciate how much they were accumulating. They started in the early 70s, and by the time it was kind of discovered or exposed, however you want to say it, they owned a ton. The spark for this enormous investment and relatively significant effort was the collapse of the Bretton Woods agreement, Bretton Woods monetary system, which basically untethered the dollar from gold. Hello, Melissa. How are you doing? Because of the untethering of the dollar from gold, Nelson particularly feared inflation and devaluation of what was then becoming a fiat currency. Fiat means it's just the paper. There's quote unquote nothing backing it. Now we talked about fiat currency and backing and all before. If somebody has a question, be glad to answer it, but I'll save that discussion.
Hey, Clay,
Yes,
give
ma'am.
me a sec. My eyes are dry and I'm not seeing all that great, so I'll be right back.
Okay. All right. Yeah, y'all also say a little prayer for Ellen. She was, doing some work the other day and apparently pulled a pretty good muscle in her back. So she's a little bit uncomfortable. The lone Jane, the Lone Ranger silver mine in Texas. I don't think they, and I'm not sure honestly. I don't think they owned mines. They just bought up silver and stored it in a vault, actually in Switzerland. Um, but I don't know offhand whether or not they had any interest in any mines. They very well could have. Their motivation for silver has long been referred to as the poor man's gold, a tangible asset that would hold its value in times of crisis, or so the so the theory went. They had a big distrust of government and a distrust of banks, and kind of helped work together to fuel their obsession, their concerns about inflation and devaluation of the dollar. Bunker once said, paper money will be eventually worth what it's printed on. One of his better quotes. Question for y'all: was he wrong? Was he just premature? If he was right, if paper money eventually will only be worth the paper it's printed on, how do you protect against those kind of risk, if you can at all? So quick, bottom line question: was he right? Was he wrong? Or was he just premature? I guess those are different ways of describing two choices, but it's an interesting concept, particularly with the way things have changed since the 70s in terms of value of money. So let's take a look at at the process. Starting in the early 70s, the Hunts quietly began amassing silver. They bought bullion, coins, and futures contracts. And keep in mind at the time, a futures contract. A futures contract is just an agreement to do a deal in the future at a price agreed upon today. So they would enter into contracts to buy gold at today's price sometime in the future, 3 months, 6 months, whatever. And they would end up buying the gold and storing it. Back then, silver was delivered in uh, bullion form. As Ellen already alluded to, by 1979, they controlled over 200 million ounces, more than half of the world's tradable supply. That's a hell of a chunk. And they were storing it in a vault in Switzerland, paying for security guards and everything. 200 million ounces. One report I saw said it would fill 2 Olympic-sized pools. That's a lot of silver. Now, I guess I need to have a disclosure here. The pick that I'm using, my screen's over here, so a lot of times you'll see me pointing to it over there. The pick I'm using has Hunt stamped on the silver bar, but it actually has nothing to do with these 2 Hunts. This particular Hunt was a jeweler, not actually associated with the Hunt brothers' effort. Just a jeweler who dealt in silver and gold and would melt down, silver coins, jewelry, convert it into a bar, and then stamp their bars. It was 0.999% fine silver. But I thought it was a cool pick, so I'm going to go ahead and use it. Now, here's a graph. I love pictures. I'm a guy. I love good pictures. This is a great picture. This shows the silver prices from 1970 through the close of trade yesterday. And if you'll notice, you have 2 prominent spikes. Well, this one back at the end of the 70s is the Hunt brothers. Let's see, right down here at the bottom, somewhere around in here, this is February 1979 when the leaks started. So they had been accumulating the silver since 72. Had a chunk of it. I don't know exactly how much they had at this point, but let's say near half the world's supply. And nobody had really noticed, which is kind of interesting, kind of telling. That much supply had been sucked up and nobody missed it. You can tell the price, from 1970 to 79 trended up a little bit from, $5 or $6 to $9 or $10, but over 8 years, 7, 8 years, that's not a whole lot. Well, word got out and the price of silver just started blowing up. Now, one thing to keep in mind about the accumulation was that the Hunt brothers were borrowing to buy the silver. They used a lot of leverage. They didn't actually spend their own money normally. They would borrow it from brokers and use it to fund their purchases, kind of leveraging their wealth, so to speak. They started buying futures contracts primarily at a stupendous rate, just a massive rate. And normally with a futures contract on commodities, on metals, you'll need to put 10 to 20% down. So you put up 20% of the value of the contract. Well, the Hunts worked out a deal with their brokers where they didn't need to put down 10%. Instead, they were able to get banks to promise on their behalf that the money for the margin would be available if needed. So they literally didn't even have to put anything down, or were putting just 1% of the contract down. Now with silver, there's 100 ounces per contract. So for each contract, if silver was $10 an ounce, you'd be looking at $1,000 in value per contract. So they should have been putting down $100 in margin, in equity. They were putting down $1. So that ability to use leverage enabled them to just literally buy futures contracts left and right. Now, the strategy obviously yielded them enormous profits uh, with just a small increase in the value of silver. If silver went from, you know, $10 to $10.10, well, the 10-cent gain on the um, price per ounce was multiplied by 100. So that gave them $10 gain on for each contract. They had $1 invested. So for each dollar invested, they made 1,000% for every 10-cent increase in the price of silver. Are you getting the picture? Does that make sense?
It does, but so you're saying for every dollar they made $9 or 10?
They made 10.
Okay.
If the silver contract increased 10 cents an ounce. Because remember, there's 100 ounces of gold in each contract.
So let me ask this. When you say and when I said they owned half the silver, is that just in the market or do they actually own half the silver in the world?
Well, for each actually half the silver in the world
Okay.
that had ever been produced. I say
Okay.
ever. Obviously, some had been lost through the ages, but of
Like
the
they
known
had
silver stock at
possession,
the time,
they had
yes, in their
possession
vault.
of it?
In their vault.
Okay.
I was saying earlier that, saw one pundit estimate that the silver that they owned would fill 2 Olympic-sized swimming pools.
Wow.
200 million ounces. And
That's
that's
a lot.
troy ounces. Yeah. That's a lot. So, as long as the price of silver was going up, their fortunes sold, and they used this increase in value to buy even more contracts. So they were just cooking right along for years. Now, they also, there's a flip side to that story. And if the price started falling, their losses were also magnified. So keep that in mind. If the prices decline just a little bit, they could quickly lose everything.
Right.
So to profit even more, the Hunts partnered with 2 Arab sheiks and a group of anonymous investors. I couldn't really find out any good information on those. I didn't work on it a whole lot, but they and they were working through a Swiss bank. They weren't necessarily buying it all directly. So between the 3 and different companies and different groups, different banks, they were accumulating this silver on behalf of the Hunts. As prices rose and they made a profit on a futures contract, they could take that profit and use it as margin at 1% to buy many more futures contracts. I'm trying not to get too much into the numbers, but you get the idea. Speculators, once the word got out, February of 79, speculators and small investors seeing prices rise jumped in, created just a huge feedback loop that drove silver from $6 an ounce up to right below $50 an ounce here at the peak on January 18th, 1980. And you can tell it just went postal, just went absolutely vertical. Now, to manage their holdings, the Hunts required fleets of armored trucks and security guards because they would pick the silver up somewhere in Europe or, possibly other areas, and then they'd have to transport it to Switzerland to store in their vault. In doing all of this, the Hunts took a risk a risk they ultimately couldn't afford to take. Remember when we talked about Peter Druckenmiller, a guy who I think is probably the greatest investor in modern times? Um, well, Druckenmiller was late to the party, stayed in for only a few months, and got out, cut his losses. He ended up losing $600 million, but that's really where Druckenmiller got his strong belief that you've got to control your downside risk. Well, the Hunt brothers were oblivious to it. And my rule number two: stupid,
Stupid should hurt.
stupid should hurt. Well, it did. Now, once the word got out that the Hunt brothers were, trying to corner the silver market, COMEX, the commodities exchange, on January the 7th, 1980, implemented a rule which came to be known as Silver Rule 7. And this rule limited the amount of silver contracts any single entity could hold. Crucially, more importantly, it also restricted buying on margin. I talked about how the Hunts were using leverage to buy the gold. Well, Silver Rule 7 cut into that, whacked the hell out of it, actually. And because of this rule change, it forced a lot of the speculators to cover positions with cash. So now all of a sudden, all these people that had, tried to, along with the Hunts, tried to exploit the rise in silver prices and had done it with margin or leverage, had to start coughing up cash. Well, as you can imagine, a lot of them didn't have that much liquidity or cash, so they had to start selling their silver, start selling their futures contracts, or reversing them technically. This covering of the short positions, well, it had an effect on the price. As you can tell, what goes up quickly came down pretty damn quickly as well. Also, keep in mind during this time, during 79, the Fed raised interest rates from 10% to 14%, which made borrowing even more expensive. So the money the Hunts were borrowing from the banks, not only were banks starting to call in some of these loans and want cash, the rates they were charging the Hunts was increasing. So prices peaked on January 18th, as I mentioned. Remember, the COMEX rule was implemented on the 7th. Prices peaked on the 18th, and the Hunts were already facing margin calls, cash crunches. Excuse me. As the rule took effect, more and more selling pressure mounted, prices collapsed. On March 27th, which is known in the commodities industry as Silver Thursday, the Hunt brothers missed $100 million margin call. So the lender told them they owed $100 million the next day. They could not pay it. That precipitated a single day drop in silver prices of nearly 50%, which only compounded their problem. Remember that whole leverage deal? So their whole account, their whole dream was just blowing up in front of their face, and there wasn't a damn thing they could do about it. Within months, silver had dropped back to $11 an ounce, which you can see here, 5/23/1980. Now, this, poor man's gold was turning out to be a rich man's curse because it leveled the Hunt brothers. during the 90s, which I really didn't show, but through the 80s and the 90s, silver stayed around $6 to $10 an ounce. I mean, it wasn't even worth mining it.
Hey Clay,
Yes, ma'am.
when did the Hunt brothers start buying it?
Started in
Oh,
72.
you have to point. I cannot read. My
Yeah,
eyes are so.
it's not on this chart.
Okay,
Um,
so is it lower than that or higher?
it was around $6 to $10 an ounce when they started.
And then it was up to what?
See, this chart goes back to the 1970s. Right around here somewhere is where they started buying it
Okay, so
at
it's the
roughly
value.
$6.
So the value when they had the margin call was still higher than when they purchased it, correct? Or no?
Yes, they were purchasing it all the way up.
So then, okay, so that's where the margin call came in.
Yeah. And
Okay.
and once it started dropping just a little,
Mm-hmm.
it started blowing up fast. And their
Gotcha.
losses just were magnified because they had bought some of it at these much higher prices.
So they screwed themselves.
Yes, they were, like I said earlier, oblivious to their downside risk. Didn't
Gotcha.
didn't manage it at all, and that's a grotesque understatement. And at this point in time, when silver fell to 10, $8 an ounce, mines and new development came to a standstill. It wasn't worth mining. The dirt cost more than the silver they got out of it. So the whole industry just was leveled. There was obviously a domino effect. Banks and brokers who had extended this credit to the Hunts obviously didn't protect their downside risk. And that's the whole purpose of margin. When you buy a commodity like silver or gold, you're supposed to put down 10 or 20% of the value of that contract. And then the daily fluctuations, if the price drops, that comes out of your 20%. And once that initial amount gets to a certain level, it can be 50, 60, 70% of the initial. The banks will call you and say, you need to deposit more cash. And that's what was happening to the Hunt brothers. They were getting these margin calls. If you don't have more cash to put in, the broker will just close the account. It will reverse the trade, take the loss out of whatever equity is left, and give you whatever's left.
Clay, do you think it's a good idea for people or for the market or whoever to stop leveraging and offering
Well,
the
if it's done in a margin account and the margin rules are followed, it's safe. The, the individual may lose. The individual may lose big, but in terms of the system, the risk to the broker, that's why they do margin.
not talking about the risk to the person who's purchasing the stocks. Like a lot of people who invest in the stock market are not savvy about the market, in my
No,
opinion.
and most individual investors don't use margin.
Okay.
So most individuals are just straight cash. They buy it for cash, they sell it, they receive the cash.
But do you think it's a bad idea to take it all to cash? Unless you have the assets to back up.
It would be hard for me to say yes because I use margin on occasions,
Right.
particularly if I trade options. Options, futures are only available in margin accounts, but I
But I
have to
mean,
deposit cash.
right.
And if there's a loss in it's marked every day. So if there's a loss in the value of the asset every each or for a day, That comes out of the margin, my cash. If my cash gets to such a level, whereas a percentage of the value of the asset, it's too small, normally it's, 30 to 50%. Then my phone will ring, my phone will blow up, and it'll be the broker saying, I need to contribute more cash to build my margin back up. If I
Right.
don't, they close out the account, they sell the asset, whatever loss is left in the loan, they take out of the margin. I get whatever's left.
What, here's my question. There's like a major increase, decrease, whatever, and it's going faster than they can get a hold of you.
They'll go ahead and close it out.
They'll close it out once you hit
Yeah.
that level and you're done.
Yeah. If you don't answer the phone, the broker will never lose on a margin account.
Okay.
Now, I say that, keep in mind the unique arrangement the Hunt brothers were able to work. 1%. So that cash position was immediately vaporized if the price dropped just a few pennies.
Right.
And so then the brokers were calling the banks who had guaranteed it, getting them to put up the cash. The banks were trying to call the Hunt brothers to get the cash out of them. Well, they didn't have it.
But they had
So
the silver.
they had the silver, but you can't dump 200 million ounces of silver on the market.
Yeah, but you would think
Understand?
someone at that point in time, when did we go off the,
All right, hold on. Let's do one
okay,
thing at a time.
sorry.
Imagine committing to buy silver at $50 an ounce up
Hmm.
here.
Right.
Price crashes, and within a few days, it's $20 an ounce.
Hmm.
So I've got to sell 2 or 3 ounces to cover 1 ounce of loss.
Right.
And if I start dumping the silver, there's two things. One, the price doesn't continue to decline. And two, me dumping silver on the market in bulk won't impact the price, which we all know it will.
Um, I'm not saying
So,
market, I'm just saying sell it to jewelers to,
well, that's what I'm saying is they start
okay,
selling more and more, it's going to force the price down. Supply and
true,
demand.
true.
You
Okay.
greatly increase the supply of something. If demand remains constant, price is going down. So the banks and the brokers, bottom line, the banks and the brokers that had extended credit to the Hunts were left holding the bag. Firms like, Bosch Halsey and Stuart Shields were nearly collapsed under the weight of the defaults by the Hunt brothers. Basically required emergency liquidity infusions from other institutions, other banks. The Federal Reserve even got involved.
Hmm.
Paul Volcker, who was the chairman of the Federal Reserve, set aside his own objections to banks lending to speculators and gave his approval for an $800 million, nearly $1 billion line of credit to the Hunts so they could pay their silver debts without an emergency sale of their other investments. James Stone, the chairman of the COMEX, who basically triggered all this with the silver rule number 7,
Uh-huh.
said, quote, the potential was catastrophic. It was a close call.
The potential.
Yes, for a systematic failure. Because we're talking $1 billion in loans back in 1980.
That's a lot.
That's a lot. It would be, the equivalent of more money than SVB and First Republic. And you saw the
Oh,
Fed had to step in to bail those out.
mm-hmm.
So that was, it
Wait,
was a big
you mean the
deal.
taxpayers?
Yes. Now, let me ask y'all a question. Was COMEX's intervention? justified? Should regulators step in if they
No.
see a bubble or to prevent a bubble?
No.
Yeah,
In my opinion, no.
I don't disagree. Um,
Stupid
the
should hurt.
yeah, but keep in mind the hunts might have been okay if Comex hadn't changed the rules midstream.
True.
Don't really know.
You got to wonder what the backstory is for Comex and why they did what they did.
They just saw what the Hunt brothers were doing, and with 1% margin, and felt like the risk was too great. I don't know that they thought about it a whole lot. I haven't seen the deliberations on what all went into determining that rule that they implemented.
Yeah.
But bottom line, Comex realized it didn't demand sufficient margin for the trading, but requiring it when they did, to me, that action was almost punitive, intentionally punitive. In doing so, the focus, and think about if they hadn't done it, and if the hunts, had been allowed to continue, the focus turned from the failure. Uh, the focus turned to the failure of the strategy, but ignored the potential lessons from it. That inflation would ensue and destroy value. If people saw the hunts, who were worth probably $6 billion when they started, that's not a small sum in the 80s. If they saw these people making hundreds of millions of dollars, now we see Elon and Bill Gates and some others worth hundreds of billions of dollars. It's just numbers to us, but back then it would have been incredibly impressive,
Okay.
and
Yeah.
people would have been. It'd be like somebody being worth $1 trillion today. And people would be going, how did they do it? Why did they do it? And I think you would have a whole lot more discussion on inflation and it destroying value. I think you would have, in some ways, had a much better informed society in terms of financial matters.
Right.
Would the press, the question really boils down to, would the press be covering why they succeeded? Why silver soared in value and was in such high demand by the hunts? Would they be discussing fears of deflation, devaluation of the dollar? So I'm kind of thinking that the public would have been better informed.
What do you think the motivation was? I mean, they already had plenty of money.
The hunts,
Yeah.
well, I don't think they obviously anticipated all of this happening. This just swamped them. They were just literally overwhelmed by the tides.
But do you think it's like a greed thing where they're like, we've got this much money, let's just make more?
I don't think it was. I think it was just a basic philosophy that they thought the currency was going to become worthless and they wanted to hedge their risk. And while they were doing it, it started working so well that they just kept doing it.
Okay.
It was immensely profitable for 6, 7, 8 years. And it's kind of like, finding the pot of gold at the end of the rainbow.
Right.
If you ever found one, you'd be a whole lot more obsessed with tracking down rainbows. And it
But
was just free money to the hunts.
but kind of like, you said in the past that, it's only worth the perception of its value.
Yep.
So why did they think silver was going to be a thing? Because
Well, back then, and even today, you have a lot of people say it's tangible.
buy gold. I hear
Buy
it all the
gold.
time.
Yep.
Yeah.
And people just have a hard time giving up that mantra.
Mm-hmm.
They think it's an inflation hedge. I mean, anybody that's talking about gold will inevitably say it's an inflation hedge. Same with silver. I see people advocating buy silver today, and they're all advocating that, it's an inflation hedge. It's just it's just literally automatic.
But it's just strange to me because, like you said, I mean, I could decide that a black lined, you know, piece of paper is super valuable. It's kind of the same thing, no?
It's kind of the same thing. Um, but the thing is perception. J.R. Tolkien once said a single dream is more powerful than 1,000 realities. And I've known people that have been killed over dollars. So, and I've even discussed this with a noted politician who was arguing for the gold standard, and he was talking about the dollar was worthless, wasn't backed by anything, was fiat money. And so I offered to give him an ounce of gold, his tangible, valuable material, which was back then, I don't know, $800 an ounce,
Mm-hmm.
for $2,000 worth of that worthless paper. He wouldn't do it. In fact, that kind of ended the discussion.
Yeah, and I don't mean to be like go off on a tangent here, but it makes me just wonder about their motivations. I know you said they thought that the dollar was worthless, but like, so could silver be worthless?
Well, they didn't think the dollar was worthless. They worried about it becoming devalued over time.
Same thing, right?
Yeah, becoming more
Yeah.
so. Obviously, they valued the dollar, and so the question is: were the Hunts right? Did the dollar lose value over the years? Let to kind of bring that into focus. Let's look at the way things were in '70s.
Wait, real quick. Okay.
Yeah.
So you can have inflation with the dollar,
Yes.
but you can also have inflation with silver and gold, correct?
When we were on a gold standard, we still had
Hmm.
inflation. We
Okay.
still had depression.
Right. Just wanted to get that out there before you continue.
Yeah. And if you remember Rome, you know, they grew to such economic heights with a gold coin. But as their power and might grew, so did their luxury, their desire for more lavish furnishings, their greed, their waste, et cetera, et cetera. So you saw successive Caesars calling in that gold coin, melting them down, issuing new coins with less amount of gold, which is a devaluation.
Right.
So a gold standard doesn't necessarily prevent that. If you have to have, I don't know where gold's price was today, $2,800. I don't know. Just pick a number. If you have 1 ounce of gold for every $2,000, well, if you want to produce $4,000 in the money supply, you can just change the conversion rate. It's that simple. There's no fixed requirement that ratio be constant, and it never has been throughout history.
Yeah, you still print the cash. The gold's just worth less.
Yes. Well, each dollar is worth less.
Well,
And the
each
gold, the dollar amount should increase. But if you look at the price of gold, like silver in the 80s and 90s, didn't budge. Inflation was raging on. So the price for silver and gold it isn't a steady, constant. correlation with inflation. It
Let
moves in
me
streaks and spurts as demand increases. Go ahead.
let me flip that. If I have 1 ounce of gold and its value is $2,000, if I print 2,000 more dollars, then the value of that same ounce of gold is 4,000, which so each little piece of gold is worth less.
Yes.
Okay,
Well,
that's what I was
each
saying.
each little piece of gold is worth more. Instead of 2,000, it's now $4,000. But it's the same ounce of gold. You're just trading more currency for it.
Right.
The currency loses value.
Exactly. That's
Yeah.
what I was trying to get at. Yeah.
And that's the way it should work in theory. The reality is you can print more money and the price of gold doesn't change, which in actuality drops the real inflation adjusted value of gold.
That's what I was trying to get to. Sorry.
Yeah. No, that makes sense. Um, so were the hunts right? Well, I did some little hunting and pecking and tried to find out some average values I used 72 when they started because that's when they had the initial fear of the dollar becoming devalued. The average home, which was 3 bedroom, 1.5 bath, was $26,000, 26,008. That same house today in mid America would be probably 180,000. Now, if you look at the median price of homes, the median price is, I don't know, 413,000. But today we're building a whole lot bigger houses than they lived in the 70s. They have more amenities, nicer furnishing, whatever.
More
Nicer accoutrement.
bathrooms.
Yeah, more bathrooms, whole thing. Bigger closets, whole thing. Kitchens all have microwaves, one or two ovens, stove, those kind of things. A lot more space. So, I tried to find or estimate, 3, 1.5 in middle America. So my number may be off. But anyway, it gives you an idea. Cost of college for 4 years. This includes room, board, food, and tuition, books. $10,000. Nowadays, you're probably looking closer to 135,000. Medical out-of-pocket expenses, $123 per year.
Hey, hey, Pops is still lower than that for the year.
Yeah, but I'm
But
just looking at averages.
he retired in 84.
Yeah.
So
Now the average is probably close to about 1,500.
out of pocket,
Yeah,
if you're retired, it's more average
per
of
person.
4,000.
I'm just talking per person
No,
on
yeah,
average.
4,000.
Um, Cost of a car, $3,500 in 72. Today, probably closer to 55,000. Again, the cars are nicer, bigger, whatever, but food, this was a big one. $1,500 a year for a family of 4. Nowadays, you're looking at around 17,000. Also, keep in mind, one thing that helped back then was families on average grew 30 to 40% of their own food. Most people had a garden or a family member that had a farm, that kind of thing. Nowadays, less than 1% are able to grow any of their own food. There's a lesson in there. If at all possible, strongly encourage you to start growing at least some of your own food.
You can do it in
Also,
pots.
do what?
You can do it in pots, even if you don't have like a yard.
Yeah. That's something I think we need to get back to.
Hmm.
Far less candy, far less chemicals. The median income for a one earner household was 13,500, and they had the house, a car, you know, put kids through college. It's about 81,000 today. So are we better off? My question to y'all, are we better off? Were the Hunts brainiacs or were they bums?
I'm still undecided.
It's food for thought. There were winners and there were losers, which kind of reminds me of that old song by a group named Main Ingredient. Do y'all remember that? Everybody plays the fool. There
I
is
don't
no
remember
exception to the rule.
I don't remember the group, but I remember the song.
Yeah. Um, Sometimes you win, sometimes you lose. And I got to give a hat tip to Aaron Neville as well. He did an outstanding cover of that song.
Maybe
But
that's where I heard it.
yeah, but I digress. There were winners, there were losers. The winners include jewelers and silver manufacturers, like people that would make, teapots or whatever, because the prices of their goods had just started soaring. It was, their sales were starting to be impacted. Also, those who saw the steep run up and started shorting silver, they did pretty damn well too.
Mm-hmm.
Or those who were, you know, do I say smart enough or lucky enough to exit at the peak? You know how hard it is for most people once an asset starts soaring in price to say, I've got a great return here. Let me just close out my position. I mean, look at AMC and, what's
GameStop.
the other? GameStop.
GameStop.
Yeah. Damn stock went up to $380, $400 and people were buying it. Anyway.
Okay, question.
Okay.
Random question. So is silver plated with something else, or something else plated with silver?
It's something else plated with silver. Silver's on the outside. That gives it the nice shine and makes it tarnish.
Mm-hmm.
Yeah, you've probably never had to clean silver.
Me? Okay.
Yeah, but it's just you'll take. I'm not even sure what they use underneath it. Tin maybe, and make the teapots, and then put it in an electrolysis bath with silver in it to attach it to the tin or whatever the other metal is. And so you've got a silver plated item, which is a whole lot cheaper than if it were pure silver.
Correct. Because silver's worth something, apparently.
Yes.
And I actually do still have a silver filling.
I've probably got a couple actually.
Mm-hmm.
So by the end of the whole trade, their net worth was minus $1 billion. They owed $1 billion. So they had started out with a net worth of somewhere around 6 billion. Ended up owing 1 billion. They sold off most of their assets to try to repay debts and unwind their silver trades. They owed the IRS $160 million in taxes. They had to pay fines to New York for conspiring to manipulate the price of silver, and obviously billions and billions to lenders that they had borrowed money from. So by 1986, they had declared corporate bankruptcy, followed by personal bankruptcy 2 years later. Now, just in case you're out there and feeling sorry for them, don't. The Hunt brothers were, still doing okay because they had funds in a trust set up by their father, that none of this was touched. even by the series of lawsuits that followed the collapse of the Silver Empire. So each trust was estimated to be worth about $175 million at this time. So that's back in 1985, 86, 87. That's not horrible. Now, Nelson would live another 30, 34 years before passing. He died in 2014 at the age of 88. Last I heard, William is still alive at 94, living in Dallas. So, one other anecdote you might be interested in: the Hunt brothers' name has become associated with a more positive endeavor. Hunt Brothers Pizza. This is a convenience store pizza brand.
Wait. I mentioned this a long time ago or a few weeks ago. Is it the same Hunt brothers?
Yes.
I thought so. All right. I'll be right back. I'm just going to mute.
Okay. A convenience store pizza brand, and the pizza brand actually partnered with Team Penske, for any of you race car fans out there, and sponsors Joey Logano's number 22 Ford Mustang. I'm not sure what circuit he runs on. I should have found that out. But Hunt Brothers the pizza division plays a significant role as an associate sponsor in the NASCAR Cup Series. So all you NASCAR fans out there, this ought to be familiar.
Hang on, because Clay gives me crap because I stop at this one truck stop when I'm coming to my grandfather's. And I was like, I'm here. I was like, I'm getting, they have pizza. He's like, that shitty pizza. I was like, yep, pretty much. It does not taste good. It tastes like cafeteria pizza.
I actually like school cafeteria pizza better than I do that stuff.
But you told me, you're like, oh, they have shitty pizza.
And they do?
Yeah, it is crap pizza. It is horrible pizza. I do not recommend it. But if you have like a nostalgic thing for elementary school cafeteria pizza,
that's as close as you're going to get.
Billions on this. But it's horrible. It really is terrible.
Yeah, I don't know who thought, hey, we can make a lot of money selling the worst pizza in the world at gas stations. That is a thought that would never come to me. But it worked.
It's weird.
It is weird.
It's not I don't even know. It's like, let's go buy shit pizza and not enjoy it when anyone can deliver to pretty much anywhere.
Yeah, if you're out in the middle of nowhere and the choice is a Twinkie bar, a Twinkie versus this old pizza, okay, maybe.
Maybe.
But I mean, the chain, the company makes money.
A ton of money.
There's, yeah, with what you pay per slice.
Yeah, Shark Tank wouldn't even touch it.
And that's saying something.
Yeah, because it tastes like cardboard pizza. No offense, Hunt Brothers, but how you managed to scam another generation, I have no idea.
Yeah, so, like I say, they quit speculating in silver and made pizza instead. It's kind of like minting silver. So, good for them.
Now see, Scrub Daddy.
Scrub Daddy was an idea that sharks should have taken advantage of. I still can't believe they didn't. You can tell that none of them has ever washed dishes in their life.
Well, that's not even that. If you've never, okay, I'm going to sell Scrub Daddy right now. Guys, if you're watching, give me some props. Scrub Daddy, right? You get the little sponges. You can put them in the dishwasher. They don't hold bacteria. It's the best thing ever. You keep them cold, it stays hard, it gets all the stuff off. You get it warm, it gets soft. It's perfect. And now there's
Yep.
Scrub Mama too, which has a soft side and a hard side.
Yep.
Throw them in the
I mean,
dishwasher. You're good.
Ellen brought a box, and I pulled it out and looked at it and go, "What the hell is this?" And then all of a sudden I thought, well, this might not be horrible, so I tried using it. Great idea, absolutely great idea. So, what happened after the price fell? Now, this graph goes back to 1960. So you see this peak here, which is the early 70s, and this is silver demand. This is not price. This is just quantity demanded in the marketplace for silver. And you can tell that demand went down as the price went up. The demand for silver bottomed around 1980, 1981. And then from there, it almost went exponential as people started using silver again. During part of this, silver was also used in photography. We didn't have digital media. And so, like in Polaroid pictures or in the regular film cameras, SLRs, you had to use silver in the process.
I didn't know that.
Yeah. Later on, starting in the 2000s, here you see the peak around 2007. You've got the subprime crisis where all industry just pretty much choked down, and then you've seen it picking back up. This increase is, obviously you've got digital media coming online during here. You've got dentists quit using silver. So what accounts for the increase here from, roughly 2010 or 11? Well, that's solar panels.
Is that it?
That's
Because I
it.
know that silver is also a great antibacterial.
Yep.
It's a great, they make these nanoparticle discs made out of silver that they put in water collection areas in third world countries that keep bacteria and crap out of it. Also, when diamonds got stupid expensive and so did gold, people were getting their wedding bands set in silver instead of gold or platinum.
Yeah. It is a highly conductive metal. It's used in your phones, your computers. It's used in some types of bandages. They're colloidal silver bandages. So it's used as a catalyst in the development of plastics and chemicals. Now, a catalyst is something that
Speeds
acts as do what?
it speeds a reaction.
Yes, but it's not consumed in the reaction. It just helps lower the energy threshold needed for the reaction to occur. And then after the reaction is completed, the catalyst remains. So it's not consumed or transformed in the reaction.
Okay, weird, but is that the same as an enzyme that's a catalyst? Okay.
No.
Here we go. Hang on. Sky.
Remember when sterling cutlery was popular and sold at Burke's? I don't remember
Listen,
Burke's,
I don't know Burke's, but if you are from the South, when you got married, you had a set of sterling silver
cutlery.
Yeah.
Yeah.
When I say cutlery, I think of knives, but place settings, the whole forks, knives, spoons, whatever.
Yeah. My mom had a nice set, and the box was really cool.
Yeah, and it was really crappy to have to polish it. every
Once a year
Sunday.
to bring it out for Christmas.
We did it every freaking Sunday.
Polished
It was
silver?
me. Yeah,
Oh, wow.
yeah.
Yeah. No, mom would just pull it out like, early December and start polishing it. Now, and if it was kept in the box and the box wasn't open, it was in pretty good shape.
Well, one of one of my grandmothers, taught me about put lining the sink with aluminum foil and then putting Mr. Clean and water in there. You put the silver in there, and it all the tarnish vanishes.
With Mr. Clean?
Mr. Clean water, but you have to put aluminum foil and line the sink.
Huh.
I don't know why it works. I don't ask questions. I just, yes, ma'am.
That'll work.
Hmm.
Um, all right. So demand for silver. Also, there are some coins made with silver. Most of them in America no longer have silver in it, but around the world, there's still some made with silver.
Moffat.
Do you use your mother's cutlery now? No, my sister got it. I got some of the like teapots and candlesticks and those kind of things.
And
She
the
got
sugar thing.
and the sugar thing. Yep,
I
I
took a
do
bunch of
use it.
his mom's stuff out and polished it.
Yep, which was greatly appreciated. I
And the
will say.
candlesticks, and you got a whole bin out there in the
Yeah,
garage. Probably should have said that. Sorry.
it's all right. Um, let's see. So silver demand. Yeah, I keep running off track here.
Sorry.
The economic impact of all this was basically tightening of margin requirements and regulations in the commodities exchanges, um, with the goal being to try to prevent future excessive speculation. So, how successful has that been? Obviously, nobody's been able to corner a market like the Hunt brothers did. There's
Mm-mm.
still been a few times where people have gotten a little crazy. Now, looking at some parallels in history, a lot of people wonder if, for example, Bitcoin is this generation's silver bubble. And so I've got the
Huh.
two graphs. Sorry, I thought you wanted to say something.
No, I just said, huh.
Oh, okay. Sorry. Here you see the price of silver from 1970 through the end of this week, and you can obviously tell where the Hunt brothers were a little active. But the price of silver has remained pretty stagnant, particularly through the once it settled down in the 80s and 90s, particularly through the 90s and the 2000s. Now, of late, it has started increasing in price, but whether or not that holds or not, we'll see. You can contrast that with Bitcoin, and Bitcoin started at a fraction of a penny, and then has had peaks, comes down, peak down. Bitcoin's trend over the 10-year period, which is, I mean, Bitcoin's trend over a 10-year period is continually increasing, fighting through drops, fighting through bubbles or excesses, and regaining its value. Now, like silver, Bitcoin has been seen by many as a hedge against fiat currency and inflation. Speculation has driven prices from $1,000 up to 20,000, and then it collapsed. Even went back down to 4,000. But there's a difference. Bitcoin's rise isn't due to one investor failing or one investor hoarding it. its collapse is not due to one investor failing. Some of the collapses, for example, were due initially to profit taking. It hits 20,000. That's kind of a significant level. And so, mentally, some people are, start taking some profits. There were also at the same time hacks of Windows. Thank you, Bill Gates. Do y'all remember the WannaCry hack? WannaCry? This was where hackers would, put a bug on your machine, and it would lock your machine up, and it would have a message: you need to transfer this amount of Bitcoin to this account, and then we'll release your machine. So that kind of made a lot of people very suspicious of Bitcoin. Korea and China at the same time were trying to ban Bitcoin. So all of that, is kind of huge. Well, Bitcoin not only persevered, but it prospered, which is also kind of huge. Jane, were the Hunts able to keep some of that silver? I mean, if I were them, I probably wouldn't want to have ever seen another piece of silver in my life. But I believe everything in the vault had to be ultimately liquidated in an orderly process or delivered to some of the futures contracts that they defaulted on. That's kind of one reason why now a lot of commodities contracts for index funds, gold and silver, are now settled in cash, not the actual delivery of the bullion. So it keeps, it's kind of a hedge to keep anybody from hoarding the metal or the commodity. Something else, interesting about Bitcoin happened this week. I don't know how many of y'all heard the chairman of the Federal Reserve. I refer to him as J. Powell, but Jerome Powell. He actually, in a speech the other day, described Bitcoin as, and I quote, like gold, but only digital. That's kind of huge. Powell, then went on to try to dispel notions that Bitcoin undermines the Federal Reserve or undermines the strength of the US dollar. And he put forth the argument it's not a competitor to the dollar. He, mentioned that Bitcoin is not used as a primary source of currency or as a primary source of payment. And it's not a reliable store of value due to its high volatility. Well, a couple things about those points. One, some trade is now being done in Bitcoin. Two, countries have made Bitcoin their national currency, such as El Salvador. Three, store of value. Define for me your interpretation of a store of value. Now, if you define it very short term, I have $100, I can hold it for a week, it still will essentially purchase the same $100 in goods and services that it did at the beginning of the week.
Moffat,
Yes, ma'am.
define store of value.
Well, that's what I'm trying to do now.
Oh, well, okay.
So, store of value is basically holding its purchasing power. So I have $100 at the beginning of the week. End of the week, I can buy pretty much the same goods or services that I could at the beginning.
It's like without inflation, deflation.
In a week, you don't notice it, or it doesn't
Right.
cause a significant change. But if I expand my horizon for that time frame to a year to 5 years, the dollar is not a store of value. Bitcoin becomes the store of value. There's really only about I don't know, 1 or 2 5-year windows, and you had to, buy it at the peak and, sell it later where it doesn't quote unquote hold value. But if you're looking at longer term as an inflation hedge, what you got?
Just Bitcoin.
Oh, over 100,000. Yeah.
Yeah.
So to me, when you're calling something a store of value, is it really something you're concerned about for a week, or is it something you're concerned about over years, holding its
There's,
purchasing power over years? I'm more concerned about years.
mhm.
And so to me, using that standard, Bitcoin becomes a far better store of value than the dollar, than T bills. Now, if I'm looking at just short term fluctuations, stock portfolio, I'm concerned about the stock market tanking. I'll dump the stocks, I'll buy short term T bills. But if I'm looking at protecting my purchasing power over, 5, 6, 7, 8, 10 years, 20 years, 30 years, I'm going to give a long, hard look at something else other than the dollar or T bills. So define store of value. That's a big point. And there is no clear one definition. Jay Powell just says, hey, it's not a store of value. And he really doesn't go into any great length to try to define what exactly he means by that. So again, a question to the audience: what other modern assets or sectors would be at risk of speculative bubbles?
Um, Always tech, AI.
AI would be a great example.
Mm-hmm.
Um,
Um, EVs.
EVs,
Anyone
even though
else?
I do think um, Tesla has really become more than an EV company
Oh yeah.
with their autopilot software, trying to refine it with um, I don't know that X necessarily falls under Tesla's bailiwick. I know a
No.
lot of the stock is used to collateralize the loan.
Well, with so many companies deciding to not go forward with EVs, and then with Newsom deciding that the only company that makes EVs in California being Tesla, and to not give, he was going to redo the tax credit, the state
Yep,
tax credit. Why would you leave Tesla out? They're the only company that was in your state.
it's political. It is just political.
That shit's got to stop. Like, not even looking out for the people in California, just out of spite.
Yeah, but Tesla is really a bigger company now. Has its hands in AI. Has one of the best AI departments going.
True.
Some people estimate that Tesla's value by 2029 will be $2,900 a share. So I'm not saying that. I'm not advocating that. I'm just saying Tesla is a whole lot more than an EV company now,
Yeah,
and they
I
may
agree.
be one of the few EV companies still standing when it's all said and done.
I mean, nobody else wants to produce them. The grid can't handle it. It, and if we don't do something about the grid soon, we're going to be in a whole world of trouble.
Yep. Yep. So, how do you spot a bubble? Well, a bubble, occurs when valuations get stupid or assets are labeled to be, in a bubble when valuations exceed historical norms by a significant amount to standard deviations. Uh, when everybody is thinking this will never end, that this is This is cooler than pockets on a shirt. That's how you know there's a bubble.
Yep.
Now, there are some things to, understand about investing or even evaluating whether or not you should invest in something. Try to look and see if the positions are highly leveraged. If there's a lot of speculation in them, if futures trading in it is very high, futures is still a great deal of leverage. Hedge funds, if hedge funds own an asset, they're highly leveraged generally. They'll leverage an investment 20 to 1, 30 to 1. So for every dollar they invest, they'll borrow $20. They'll borrow $30. So if the investment starts heading south, they bail quickly, and that'll have a dramatic price impact. So always understand leverage is dangerous. It can magnify your returns, but it also can magnify your losses. And you want to be aware if you're investing in an asset where a lot of leveraged players are playing. The Hunt's reliance on borrowed money bit them in the ass, led to their financial ruin. Similarly, you see a lot of modern crypto traders using leverage, and they face ruin when the prices turn. So just keep in mind leverage. 2, regulations, changing regulations. They can stabilize and asset prices, or they can destabilize it. When COMEX came out with Silver Rule number 7, they were trying to curb speculation, but it triggered panic. It triggered a collapse. I don't think they saw that. I think they were somewhat trying to hurt or calm down the Hunts. They just didn't understand the extent, of the effects. And finally, markets are bigger than any one player. The Hunts believe their wealth, could control a global market. Time and time again, people think they are bigger than the markets. Time and time again, they are ultimately humbled. Jane, the Hunts could afford that risk because they still had their trust fund. True. But the thing is, if you're one of the richest people in the world with $6 billion and you go through bankruptcy and, are left with 170 something million, while to most of us, that would still make us enormously rich, they were greatly humbled. In fact, they had been very active at the forefront of, a lot of issues and matters, and they just melted into the quiet. So I think they saw themselves more as survivors than they did as rich and powerful. So it's all a matter of perspective. To most of us, that'd still be rich. To them, I think they felt like they were poor, if that makes any sense. Don't really know. Their exact feelings or thoughts. They've never really spoken on it a whole lot.
Now, I was going to give some perspective to this because I'm sorry. I had stepdaughters who, bless them, love them, great. But their perspective on being poor because they were the granddaughters of the man who started Jefferson Pilot was different than most people. Like I only have $100,000 in the bank.
Yeah.
So, it's perspective is everything, especially in perception, depending upon how you grew up.
Yep.
And yeah, have no pity because they stupid hurt. Yeah,
Stupid should hurt.
it does every time.
Yeah, I don't pity them.
Mm-mm.
But it did while I was, putting this together and thinking about different things. I like I pointed out, I did wonder what the consequences would have been in terms of economic and financial literacy if they hadn't been destroyed by Comex. Would people be marveling at their accumulation of wealth and wondering how they did it? Can I do this too? And then that would start the whole discussion on their fear of loss of value in the dollar, devaluation of the dollar, inflation, purchasing power risk. So I wonder if ultimately we wouldn't have all been better off if they had been allowed to succeed. I don't know. I'm just throwing this out, just idle speculation. I really don't know, and I don't necessarily have a strong position either way. I've not been terribly convinced of the media's ability to inform, much less educate people. But I would like to see more public discussion of financial matters and financial issues. It's one reason, we started this channel
Yeah.
to try to help people with financial literacy and understanding things going on in the market. I know most people don't have the time or the interest to try to follow a lot of the little things going on in the market, a lot of the news announcements, every week.
It's so important though.
It makes a difference in making informed decisions versus uninformed decisions,
Yep.
in understanding risk or not understanding risk. So, and some of the comments, emails that we've gotten, I hope it has benefited some people. I hope to benefit, more going forward. That's the goal. Whether or not I do a good job of it, I'll let y'all be the judge. But that's
And
certainly the goal.
please, God, if you guys have any criticism, let us know. Make a comment. Let us know what's going on. If there's something we cover that you're like, this is not fun or interesting, or the way you're covering it is not fun or interesting, or we can't get into it, let us know. We
Yes,
um,
please.
we appreciate feedback because we do actually want to help people um, with their, making better decisions about their finances. Because I mean, let's face it, once you hit Social Security age in the US, you are on a very fixed income, and it's going to be very important to know what you should do between now and then. And if you're young, how to invest, what to invest in, what you should be doing.
Yeah, and I understand sometimes, talking about finance and markets and some of the technical little things, which I try to give a Cliff Notes version, is not dramatic. There's not a lot of intrigue. There's not a lot of mystery, that you can enjoy on some other channels. But what I guess what we lack in pure entertainment value, I hope we make up for in the value of the content
Of the
to help,
education.
yeah,
Yeah.
to help you make better decisions.
And if you don't know, Clay is an educator. That's what he does. He um, teaches derivatives, finance, crypto. So yeah, I mean, we love having you guys here. We want to do and offer content that you want to hear about. Whether it's politics, finance, we'll do our best. And like Tuesdays, question and answer, you can ask us anything. We've done stuff from hair to Bitcoin to investing to relationships to whatever. We're
Homesteading.
here for it. Homesteading, all of it. Jane, I enjoyed the show very much and hope you do similar ones in the future. Yeah, I mean, our goal is to just make people more aware of everybody. Okay, if you're married, what is the one topic no one wants to talk about?
Sex.
Money. No, money. You'll fight about sex like all the time. Money. It's a toughie, you know? Nobody wants to talk about it because no one knows, I don't think, definitely, at least I never did, about like what the right thing to do is. What do you do with your money? Especially if you're young, if you have kids, grandkids, whatever, get them on this show.
And I try to be careful and not come across as telling you what to do, because everybody's a little different.
Hmm.
Your risk tolerance, your interest, um, your amounts that you have to invest are all different, and so I can't make carte blanche, statements and say this is what you should be doing. My
Right?
goal is to try to help you understand what's going on in the market, what the risks are, so that you can evaluate them better for your particular situation. Now, I have people email me and ask me about particular situations, and I will share with you what I would do in that situation, but that is not me making a specific recommendation to you. I try to give some information on the pros and the cons
Yep.
and just help you make better decisions that are in your best interest, not somebody else's.
Yeah, and I rely on Clay. I mean, you know, if I have a question or a thought about what I should do or shouldn't do, I reach out to him first. I'm like, okay, what do you think? What are your thoughts on this? And he's probably going to be a little more honest with me than y'all because I'm not going to sue him if he's wrong. So that's a thing. But yeah, I mean, Clay has great insight into the markets. He's done this his entire life, and yeah, we just want to share information that you guys find helpful, interesting, hopefully, and can put yourselves, your families, in a better position for your own future.
Yeah, I appreciate the kind comments, the great insight. I never describe myself as having great insight. I say I've had my face kicked in a bunch.
And you also say that your advice is worth what you pay for it. And
Yes.
I know better
I'm
because
I'm reasonably happy with my track record.
mhm,
I have screwed up some,
everyone does.
and sometimes royally, but I unlike Peter Druckenmiller, I've never lost $600 million in a single trade.
I can't even imagine. I would lose my mind.
He was working as a manager for George Soros, who was managing a hedge fund. So he had this massive, 10 or $12 billion portfolio at the time. I forget exactly what the amount was, but um, they made $4 or $6 billion alone on shorting the British pound in the early '90s. So, but nonetheless, 600 million is, and he laughs about it, which is how you know you're doing okay, when you can lose $600 million and laugh about
Soros, yeah,
it.
I think
No,
he's just fine.
Druckenmiller. Yeah, Druckenmiller no longer works for Soros, but he was one of his portfolio managers there for a while.
Sky, I'm not going to answer for Clay. I would.
Would you bet your last penny on Bitcoin? Wow, what a question. I think, and I've stated on this channel, I think Bitcoin has a relatively bright future. I don't guarantee any asset. There's no one asset that I can say I would bet my last penny on. No one stock, no one bond, etc. If I look at Bitcoin right now, BlackRock, Vanguard, State Street are pouring $2 to $4 billion a week into it. Um, There is increasing talk of the US government establishing a Bitcoin reserve. If they do, other countries will do it. There's some trade in oil being done in Bitcoin. more and more people, the SEC has approved ETFs and options trading on these ETFs. So it's becoming more and more acceptable in the investment world. So more and more people will be investing in it. You know, as these companies start ETFs like Vanguard, Fidelity, BlackRock, they have their salespeople, their counselors, their advisors recommending it to people to invest in because they want the new fund, the new ETF to succeed. So there's when I look at all this, I see increasing demand for Bitcoin. Now, it's still going to be somewhat volatile.
Hang on, I will put out there that I invested in it and I made it $1,000 in a month.
Yeah, it's so it was a relatively recent investment. And with
Mm-hmm.
with the value today, you're probably up over that. But anyway,
Mm-hmm.
the um the idea, what I try to follow, I guess the best way I can answer it is I try to follow trends. And to me, 95% of the trends I see with Bitcoin are positive in terms of increased value.
Mm-hmm.
Polymarket. Ellen, Google Polymarket and Bitcoin value, if you will, and see
Yes, sir.
where it is now.
Got to find a new tab under this thing.
Polymarket is an online betting site. And bettors are generally, if they're putting their money at stake, they're generally better informed than most other people. And so Polymarket has a betting line: will Bitcoin hit 200,000 by the end of 2025? And so I'm curious where the betting odds are now. It was 35% about a month ago, last time I looked. And then, of course, Bitcoin blew past 100,000 this past couple weeks.
Oh, crap. I have no idea how to read this. You know I can't see right now, right?
Oh, yeah.
Um, what price will Bitcoin hit in December? Is that what we're going with?
No, by the end of 2025.
Oh, I'm looking 2024, 24. I can see numbers. I just can't read.
Let me
You might,
see what I got.
I know. I'm sorry. I could not find my eye drops, y'all. And my eyes are
What?
dry as they can be.
Yeah, they've got a bunch of them.
I'm looking. Okay. Let's do Bitcoin. Uh, will it hit 250 in 2024?
Yeah, that's about over with.
That's
Well, let me just say this: if Trump puts in place a Bitcoin reserve, it will be at least 1 million coins. So what's that going to do to the price? It's going to be pretty steep.
I can't I can't find Bitcoin 2025 in the play market.
That's okay.
Sorry.
Last I looked several weeks ago, it was like 35% chance that it'll hit 200,000 by the end of 2025. I think that's, particularly if Trump goes ahead with the reserve, I think that's pretty conservative.
Uh-huh.
Anyway, my thoughts only.
Okay,
How
Sky.
does anyone how does anyone know which Bitcoin to buy? You can go on. Let me look this up real quick.
Okay, I'll be right back. I got a tinkle. Oh shit. Nope. Add to stage. Sorry. Hit the wrong one.
That's not the one I wanted here. Let me throw this up. Now you can, It is not technically difficult to go out and buy an actual Bitcoin coin, but I think an easier way for most people is to do it through your brokerage and, for example, Fidelity. Fidelity is a investment management firm, a large one, very large one, and you can open up a brokerage account for free. You don't even need a dollar to open up the account. You can electronically connect it to your checking account, and just by on your phone or going online, you can move $100, $50, $1,000 to Fidelity and vice versa from Fidelity back to your checking account. So if you open up an account, put $1,000 in it, Fidelity offers a Bitcoin fund. And this fund actually goes out and buys Bitcoin. So this is an easier, quicker, pretty efficient way for you to own Bitcoin. You can do $100. You can do $1,000. I'm not sure what the minimum investment. Minimum investment may be $1,000, but I'm not sure. It may be lower than that. Most of their funds are lower than that. So you can buy either Bitcoin or Ethereum, these two funds. So it's just an easier, quicker, efficient exposure to Bitcoin or Ethereum. And it was, hello, Chunkers. Was he
He
just
can't hear you.
needing some screen time?
He does. Hey, Bubba.
He's so fun. He wants attention, but he is not big on being held usually.
Mm-mm.
He's a funny little dog. He's cute though. So in terms of, buying Bitcoin for most investors, I think buying a fund like the Fidelity Bitwise fund, Wise Origin Bitcoin fund, would be an easier, simpler way to do it. It's just an idea. If you want to know how to buy Bitcoin directly, that's a longer discussion. Email me, and I'll be glad to try to go through the steps to do it.
Or, hang on, I'm getting there. Or, connect him.
Yeah. If you own a ETF Bitcoin, is that the same as a Bitcoin? Yes, the performance is the same.
We had this conversation yesterday or day before.
Yeah. Ellen was kind of asking, we were talking about the same topic. So the fund goes out and buys Bitcoin. So right now, Bitcoin's $100,000 a coin. For every $100,000 that's invested, it goes out and literally procures another coin. Remember, I talked about how State Street, BlackRock, Fidelity, Vanguard are putting $2 or $4 billion a week into Bitcoin. Well, that's how they're doing it. Investors invest in these funds. Each one of those different families has a fund. And as investors put money in these funds go out and buy the actual coins and hold and store the coins. So it saves you from having to set up that Bitcoin locker. And, you can immediately get your cash.
But then I was like, okay, so I don't have Bitcoin. He's like, no, you do have Bitcoin. You just have it through a fund that buys the Bitcoin. Not that I do, but
Yeah, it's like,
my grandfather. And I was just like, okay, so because I was trying to figure out like how it all works.
yeah, it's like investing in a stock fund. You don't directly own the stocks, but whatever performance the stocks realize is passed through to you. Nearly 100%. Same with the Bitcoin fund. So I hope that helps. Now, speaking of investing, and if you have any other questions on the Hunt Brothers, be glad to entertain it. Just thought I would throw out a few notes in the news that kind of interesting things that occurred this week. There were a few.
Or on crypto or whatever. We're here
Yep.
for it.
I saw this headline and I just sat there and stared at it for a while. BlackRock in a announcement basically stated that the world has exited boom and bust cycle. No more boom and bust, just steady growth. And they argue that this is due to a fundamental shift in the emergence of what they call mega forces, fancy title, mega forces led by AI technologies. They argue that the world is being currently reshaped by the emergence of these new forces. And, this includes the shift to net zero carbon emissions, which BlackRock has been a big proponent of ESG, environmental, social, and governance, kind of what some people would call a woke approach, for lack of a better term. And I'm not trying to be, pejorative in the use of that term. It's just trying to communicate exactly what that ESG means. But I saw this headline, and I'm a finance guy, economics guy, background, have studied it for a while, but it reminded me of Irving Fisher. Irving Fisher is a neoclassical economist who his ideas have informed both the Austrian school and the Keynesian school of economics. So he's on, both sides, I guess I could say. But he stated in 1929, looking at the market, at the end of near the end of the roaring 20s, he stated in September of 29, quote, stock prices have reached what looks like a permanently high plateau, end quote. 1 month later, in October, the crash of 29 began and the Great Depression was ushered in. Not saying, just saying. Once you start seeing people talk about we know better, we have better, we're not going to go through the same things. I've seen this 3 different times in my life, in my career.
Sorry.
That is Chunk talking, by the way.
He talks all day long, all the time.
Those sounds are not emanating from Ellen.
Nope.
But, exited the boom and bust cycle. That's the 2024 version of a permanently high plateau. That's just kind of amazing to me.
Chunk is fascinated.
With
apparently what you're discussing. Chunk, here's your voice clay. He doesn't. I have my AirPods in. He's just talking to me.
Chunk just wants her to throw the round spherical object. That is the one thing he lives for in this life. It's insane. I've never seen a dog in love with that particular act as much in love with that particular act as he is. Now I saw this also. This is kind of sad, but I thought it, informative. Redfin, a real estate firm, kind of like Zillow, took a survey, and it showed 74% of U.S. residents earning less than $50,000. It showed that 74% of those are struggling to afford their mortgage/rent payments. And to cover the sad part, to cover those monthly housing costs, 43% are eating out less often. 36% took no or fewer vacations. 25% had to borrow money from family or friends. 24% 24% admitted they skipped meals to afford rent or mortgage payments.
I've done that.
The share of apartments renting for under $1,000 a month fell to 32%, the lowest on record. Housing affordability has never been worse. So, people, and it's irritating to me. People talk about how the economy has been great or whatever. It really hasn't been. You've got to get past the hype and look underneath some of the numbers. But there's a lot of people hurting out there. Um,
A whole lot.
a whole lot. Anyway, I thought that was informative.
Hey, Clay.
Hey,
Actually, it's so blurry, and I'm in so much pain right now. I'm gonna pop off
okay.
because Trump did not help. I love you guys, and
Yeah, I mentioned Al earlier. She pulled a muscle and has been in pain. So
yeah. So my yeah, I've stuck in there almost the whole 2 hours. I'm trying, but yeah, I need to go put the
go
tennis
take care of
ball
yourself.
in my back. And I love you guys, Clay. Sweet dreams. Good night, and I will talk to you shortly. Thank you, Sky.
Good night. Um, all right. I hope she does get to feeling better. She's been in pretty bad pain all day. Greatly appreciate her joining with us. Saw this and I thought this was also mildly interesting. This is from a investment house called Nomura, and their chief investment officer was on Bloomberg talking, and he identified 6 gray swans that he thinks are risk in the marketplace. Gray swans are unexpected incidents that have a low probability of happening. The difference between a gray and a black swan is that nobody saw the black swans coming. The gray swans are risk with a low probability of happening. And on this list, number 6 was cut off. The sixth one was China's stimulus falls short in stimulating the Chinese economy. Now, to me, several of these gray swans are real risk. The Nvidia crash, for example, the carry trade unwind 2.0, geopolitics, and then the China stimulus. Looking at those, Nvidia has been the sweetheart of the tech market for the past year, 2 years. It is the core of crypto mining. The issue I see is that the area they've been leading in innovation in neural networks is plateauing. Now we're seeing just tweaks in performance. Somehow somebody, and I don't know if it's going to be NVIDIA or somebody else, but somebody is going to have to develop a new method to handle information processing. NVIDIA's new chip called Blackwell has had some problems, some pretty severe problems actually, overheating, which is not a good thing in servers and in AI use. Fundamentally, we're about to reach the limits of the current technology. New technology is needed. Where that's going to come from, it's generally somebody new. We'll see. There are also concerns about one of NVIDIA's largest customers, Supermicro, with their accounting issues and practices, which is always a huge red flag. Supermicro's auditor resigned abruptly, which also is never a good sign. They're NVIDIA's, I think, second largest customer. So if they if they collapse, Nvidia only really has 4 customers. If they lose their second largest customer, that's a pretty damn big deal. So to me, that's a very real risk and possibly a likely risk. I don't know how, what probability I would put on that, but some of the news coming out of Supermicro is not good. Geopolitics. I mean, I don't know how many people are paying attention to it, but it looks like the jihadis are going to take over Syria. Assad is, if he hasn't already, is probably close to fleeing this country. He's already pulled his family out there in Turkey. What does that mean for the Middle East if you've got a basically Al Qaeda or ISIS controlling the whole country of Syria? That's not a good thing. Now, I hadn't even mentioned Ukraine yet. We've all seen the past few weeks missiles being launched from Ukraine into Russia. Keep in mind, those missiles originate in Ukraine, but they are controlled by NATO countries and use NATO satellites for guidance. So what if Russia gets tired of having its cities and territory attacked and takes out one of these launch sites, takes out one of the satellites that's used to guide the missiles? What does NATO respond? If, NATO tries to take out a Russian satellite, what happens next? So, geopolitics is a very real risk and just seems to be getting riskier. There seems to be more and more pressure or incentive to try to start World War III or greatly expand the Ukraine conflict. It's, hadn't even touched on Israel and Iran, whether that, heats up again. Don't know. China, Taiwan, don't know. But some very real risk over the next year. Yen carry trade 2.0. The BOJ, Bank of Japan, is under a lot of risk, a lot of pressure to not raise rates. The government has huge debt. Their interest costs soar when the BOJ raises rates. So a rate hike a month or two ago, another rate hike. You remember the BOJ just hiked rates in August, and that started the precipitous drop in the U.S. stock markets due to what people labeled the yen carry trade. Well, interestingly enough, that some of the people who got out of the yen carry trade are back in it again, and the positions in it are relatively large. So if the BOJ hikes again in December, which sentiment has kind of moved that way. I don't know if you track the yen to the dollar, but the yen has strengthened over the past few weeks or month. This is kind of gives insight into the market thinking that the BOJ will hike rates again because inflation is increasing in Japan. So if they do hike again, we'll see the yen carry trade part due. Who knows the extent of that, but a very real risk. And even when you look at some of the comments from the BOJ's governors, Ueda said the other day that another hike was coming. And a well-known dove, Nakamura, stated he is not opposed to a rate hike in December. So how probable is it that the BOJ hikes rates in December? I'm giving it a pretty decent probability. The only thing that makes me a little cautious is something called the OIS swap rate, overnight index swaps. which these guys are probably some of the most informed individuals in the world in terms of what's going on with the central banks and rates and currency, et cetera. The OIS swap rates have fallen for the last 2 days, indicating these guys think there is a reduced probability for another rate hike in December. It may be delayed to January. I don't know. But the key right now is on December, having another rate hike in December. We'll see. But that to me, those are some very real risk. The third thing would be, and I'll kind of close with this, I guess. Let's see, January 19th is probably the date they'll hike it. I would say, I'm about 50-50 between December and January. The strength of the yen is kind of telling, but the last couple of days trading in the OIS swap markets make me, pull back on that a little bit. But when it does, it's going to be interesting to see what happens. Now, there was a lot of news this week, some celebration in some circles because of the public. The most publicized payroll number was released, the establishment survey. There are two surveys. There's what's called the establishment survey, which surveys companies and asks them how many jobs have they hired for the past month. It doesn't distinguish, key point, it doesn't distinguish between full-time and part-time. It just asks for the number of jobs. Well, the establishment survey showed that payrolls increased by 227,000 jobs. That's not a bad month. 200,000 is kind of the critical point there. But if you look at the numbers, the breakdown, the numbers, healthcare, which is paid for by government, basically a government job, added 54,000 jobs. Government directly added 33,000. Leisure and hospitality, another category, added 53,000, which leisure and hospitality is mostly part-time work, bartenders, waiters, waitresses. 32,000 of the jobs were Boeing workers coming back from strike. So according to the establishment survey, 76% of the jobs were government and part-time, along with workers ending a strike. That sure makes the numbers look a whole lot different. Now, I mentioned there were two surveys. The second survey is the household survey, and it surveys households, individuals, and asks, do you have a job? Is it part-time, full-time? The results in the household survey are very different, have been for a year. The household survey is historically more accurate because it looks at individuals and their jobs. According to the household survey, civilian jobs fell by 355,000 last month. Since November 2023, total civilian employment has fallen by 725,000 jobs. Now, this is net of those that lost full-time jobs and found part-time jobs. Part-time workers have increased by 463,000 jobs. So you've got 355,000 losing a job, 725 over the past year, and part-time jobs, which net against that 725, have increased 463,000. That's pretty rough numbers. Remember, I've talked about, this is not a great economy. Well, that's one reason why I say that. This many people losing jobs this consistently is not a mark of a good economy. So, anybody have any questions? Um, I would like to ask you as we close, if you will, do the YouTube or Twitter kind of things. Hit the like button. Ring the hell out of the bell, as I refer to it. Uh, if you have any questions or comments, feel free to email me at moffatonmoney or DM me on Twitter. If you're not following on Twitter, give me a follow on there. I've enjoyed being with y'all tonight. If you will, say a little prayer for E-Train, that her back difficulties get better quickly. Sky, thank you. I sent you an email. I'll try to get a hold of that probably tomorrow. I'm going to go get a little dinner, but I'll holler at you soon. Want to thank you all again. Appreciate you being with us. Hope y'all have a great rest of the weekend. Our time is up. We thank you for yours. Good night, y'all. Blessings to you.